I know for me, there are so many people asking me always about extra little things and tips that they can do with paying less tax. I know I'm always looking at paying less tax, but I thought it would be great to talk today about some extra things you can do when you own an investment property on how you can save more tax. And Juanita, you guys were both in the office. Brennan, you were telling me about this as well, about prepaying your interest. Now, I knew about it, but I kind of forgot. So I thought it would be great. Can you explain what is prepaying your interest and how can that work for you?
It's a really popular strategy actually that we use for a lot of self-employed people, and it really does have to be part of a plan. We do this day in, well, not every day, but we do this a lot.
Every year.
Every year. Every year. Applications have to be in by March. Is that right, Brendan?
Yeah, look, there are other options I can talk about thereafter, but March is ideal.
So prepaying interest. So what happens with that is we basically look at prepaying the next 12 months of interest now. So in advance, yeah. So you'd pay it now. You'd pay it this financial year. So you pay it before June, and then you get to claim it in that year's as a tax deduction for this year's income. And it works as a really good strategy when you're dealing with self-employed people. If we can increase their income a little bit this year and then drop it down next year, it works in, especially when we're transitioning to retirement, like a 5-year plan for that. Yeah. When we might want to sell properties down with capital gains tax. And so if we've got the ability to play around with incomes, which we do for self-employed people, prepaying interest is an excellent strategy that we can use to get your tax deduction for this year while we've got your income higher. The trouble with it is, though, a lot of clients know about it and we've done it for them before. They usually don't contact us until May. And by then it can be about a 3-month process at the moment. Is that right, Brendan? Yeah, generally speaking?
It depends on the lender they use, but I really, March is the time to be looking at that, especially if you're doing a traditional approach where you're fixing it in from July 1st to June 30, which is how a lot of accountants, a lot of our clients like to approach that. But
you don't have to, actually.
That's right. Yes. There are some lenders who, because effectively what you're doing with interest in advance is...
Just as long as financial year.
You're taking a 1-year fixed loan. Yeah. So you often get a discounted rate as a result of it being interest in advance. So you get a discount off the 1-year fixed rate. You're paying that in advance. So there are some lenders, and a lot don't advertise that they do it. So again, that's where you come speak with us, because we know which lenders will offer it as an exception based on your circumstances. But it's essentially, once you have locked that rate in, the date that you pay it is the financial year, of course, where you get to claim the tax deduction.
So if you're paying, say, $50,000 worth of interest for that loan, that would be an expensive loan. It would be. And I don't know many people that have got $50,000 sitting around. All right, let's go $25,000. And if you're in the highest marginal tax bracket, you effectively get, $12,500 of that back 1 month later. You know, so you pay that in June. In July, you get $12,500 back. Ideally, you'd invest that into something else and so on. But it's used more for income, like for us to play with incomes than anything. And just the fact that you pay that and you get it straight back. And I know you get it back anyway, but this is a way where we can sort of manipulate it a little bit better.
Well, you're reducing the loan amounts in effective, or paying the interest off.